Hi everybody, Tom Gile. Today is Thursday, September 10th. Before we get into this week's Gile report, I just want to reach out to you. If you, your loved ones, your family are being impacted by the fires that are going around Western Oregon and the region, our hearts and thoughts are with you. But even more than that, if you need some help, if you need to help evacuate, if you need to find a place to stay, if you have some animals or livestock you need help moving and relocating, give us a call, let us know. We can reach out and help. We've got some great resources that can also help. So we're definitely in a time, we're all in this together. 2020's thrown us another curveball, but you know what? We're gonna stay strong and we're gonna work through all this together. So just anything, if you need any help during these, again, unprecedented times we're in, reach out and give us a call. Let's get into this week's numbers. Taking a look at the supply side of the industry, first of all, looking at new listings. Looking over the last 2 weeks, it's been a couple weeks since we've had a report. So over the last 2 weeks, we're still seeing strong listing activity. We're up about 14% compared to last year. 650 new listings this week. 721 last week. There's a little bit of a tail off this week, and I think really what that is, and we'll see in the next week or so, I think that probably has to do with the Labor Day weekend, people not coming on during the Labor Day holiday. So we'll see what the next couple of weeks tend to bring, but I think that's what we're seeing, just a little blip now. If you look at just kind of overall trends, we're definitely ahead of where we were at last year. The market is trending stronger. Typically this time of year, we start seeing some seasonal slowdowns. You can see that by the yellow line there. If you actually were to draw a trend line through that, you look at about the beginning of July to now, typically we start seeing a decline in listings, and we're not seeing that this year. Also take a look at the lockbox opens. We had almost 24,000 lockbox opens again last week, so strong showing activity there. We're just hanging out just right under that 25,000 mark there. Let's switch gears and take a look at the selling side and sales. Sales are just continue to be strong, well over 2019 numbers. 752 pending sales last week, 658 the week before. When you look at those 2 weeks combined, we're 46.7% ahead of 2019, which is it's pretty phenomenal. Take a look at that gold line there, and that's really showing what we start seeing is a little bit of a decline in the market due to seasonality. As we get into this time of year, that line's dropping off a little bit. That's 2019 numbers. But take a look at the red line for 2020. You can see it's just remaining strong. We're just averaging right around that 700 pending sales a week. Definitely carrying over into the pricing side of it too. I would say we saw a pretty good jump in the market starting about July price-wise, and some stabilization here. The median price in the Portland metro area is just under $480,000. So just definitely strong prices. You know, we're up about $30,000 from where we're at in about 6 months ago. So what's driving this? Let's take a look. I think a couple big things that are driving it. It continues to be interest rates. They're really the story. And 30-year fixed rates are just still incredibly low, just a little bit under 3%. Or if you get a 15-year fixed, you're under 2.5. Last week it was running at 2.42. So interest rates driving a lot of demand in the market, keeping things affordable, payments affordable, even when prices are going up. The other bright spot we're seeing, the Government Bureau of Labor and Statistics put out August unemployment numbers last Friday. We're continuing to see a drop in unemployment. Still obviously higher than what we'd like to see. It's at 8.4%. We were at 10.2% in July. That 8.4% represents about a 1 percentage point lower than where the experts were predicting we're going to be. So let's take a look at the note here on the slide, kind of putting things in perspective here, is that during the Great Recession from 2007 to 2009, the unemployment rate was 9% or greater for 30 consecutive months. And obviously, you know, we've already dropped back below that 9% threshold. So we're seeing a much quicker recovery than what we saw in 2008, 2009. So yet another indicator that we're seeing that V-shaped recovery that we've been talking about for months now. And the economy seems to be, you know, performing well. If you have any questions about the real estate market, ask the Gile Group. We're here to help. You can check us out on social media, or send us an email at askgilegroup@gilegroup.com. And again, we're going through some very difficult times here in the region. If you need any help, that help having to do with the fires and what we're seeing here, need help with evacuations, if you need help with a place to stay, if you need help with animals or something like that, family, whatever it may be, ask the Gile Group, reach out to us. We're here to help you.